What if I told you there's a hidden game happening every time you send a transaction on the blockchain? A game where traders, bots, and even validators or miners fight to rearrange transactions in a way that makes them the most money at your expense. This game is called Maximal Extractable Value, or MEV. And if you've ever wondered why gas fees randomly spike or why your trade doesn't go through as expected, MEV might be the reason. To understand MEV, we first need to talk about how blockchain transactions get processed. When you send a transaction on a proof-of-stake blockchain like Ethereum, whether it's a trade, a swap, or just moving crypto from one wallet to another, it doesn't get added to the blockchain immediately. Instead, it first goes to something called the mempool, short for memory pool, which is like a waiting room where transactions sit before they're picked up by the validator. Validators decide which transactions to include in the next block, and they usually pick the transactions with the highest fees first. But also, since they're in control of the order, they have the power to extract extra profit, and this is the core of MEV. Originally, MEV stood for Miner Extractable Value because in proof-of-work blockchains like Bitcoin or Ethereum before the merge, miners were the ones ordering transactions and extracting value. However, after Ethereum switched to proof-of-stake in 2022, the term was updated to Maximal Extractable Value to reflect that it's not just the miners, but also validators and even searchers or bots who can extract value. As you can imagine, some MEV tactics aren't so good for the blockchain because they can cause innocent users like you and I to lose money. There are also a lot of tutorials out there that claim to help you perform MEV attacks on your behalf, but they're actually just scams that steal all of their users' money. So definitely be careful if you're looking for an automated way to perform MEV yourself. On this note, if you can, it's definitely safer to script one yourself or participate in an ecosystem that has a healthy MEV system already set up, and we'll get into some of those later. Having said that, let's take a look at some of the negative MEV strategies. These are especially common in decentralized exchanges because the transactions in the mempool are public. One of the most common MEV strategies is called front running. Imagine you're at an auction trying to buy a rare collectible, but right before your bid is confirmed, someone at the auction peeks at your bid, offers just a little bit more, and then they win the auction. On the blockchain, bots scan the mempool for big trades or any profitable transaction, even if they don't completely understand how it's profitable. Maybe it's a flash loan or a DEX arbitrage. And then, they simply place their own trade just before yours, stealing a small chunk of your profit. A similar tactic is called back running, which works in the opposite way. Instead of cutting in line, a trader waits for a big trade to go through, then immediately places their own trade to take advantage of the price movement. This is especially common if people already hold an asset that they can sell when someone makes a big trade that pushes the price of that asset up. Sometimes, front running and back running are combined into something called a sandwich attack. This is when someone sees a large trade coming, places a buy order just before it, then lets that trade go through, and then places a sell order immediately after it. The person making the original trade gets a worse price because of this, while the attacker makes a profit.